Canada's real estate market is shifting fast, and if you're buying or selling in 2025, you could be making a big mistake without the right information. More interest rate cuts are on the horizon, but rising inventory is changing the game. We have Toronto and Vancouver seeing massive listing spikes. Edmonton is on fire and Calgary is balancing out. If you are not up to speed, you could misread the market and either overpay or leave money on the table when selling. But don't worry, I got you covered. In today's deep dive, I'll break down what's happening in every major market, highlighting key trends, and at the end tell you exactly what this means if you are a buyer or a homeowner looking to sell. Stick around because this could save you thousands. Real quick, for those who don't know me, my name is Richard. I'm a real estate agent passionate about keeping Canadians informed about what's actually happening in the housing market. So naturally, this channel is all about Canadian real estate. And if you like that and you want to stay up to date, give this video a like and subscribe to the channel. Before we even talk about real estate, let's zoom out to the bigger forces shaping the market. The US is making moves on tariffs, and while the first set of tariff threats didn't stick, the second round of permanent tariffs could be coming later this year. And if that happens, it could slow down Canada's economy. But here's the twist. It may also push the Bank of Canada to cut interest rates sooner than expected. And speaking of interest rates, analysts are betting that more cuts in March will be happening. That would boost affordability for buyers, but there's just a lot of uncertainty on what is happening next. Meanwhile, the job market is sending mixed signals. We have one report saying we've lost 56,000 jobs in November, while another says we've added 76,000 in January. So somebody's numbers are off here, and the confusion could impact rate decisions. And just in case you were wondering what the heck does both of those acronyms stand for, well, SEPH stands for Survey of Employment, Payroll, and Hours, and LFS stands for Labor Force Survey. Simply put, they're both monthly surveys that provide information on employment in Canada. Then to top it off, the GDP per capita has now declined for 7 straight quarters. And when you compare it to what's happening to our friends to the south, it's a little disheartening. Also worth noting is that 45% of the GDP growth over the last year has been in the public sector. Not exactly a ringing endorsement of the strength of the Canadian businesses at the moment. Now let's talk about some quick Canada-wide market trends that I'm seeing. And so if you're one of those people that's been waiting for more homes to hit the market, well, your time has come. January brought a flood of new listings across the country. Starting off with Toronto on the left here, listings have jumped 26% from December and are 49% higher than last year. With Vancouver on the right here, up 30% month over month and 33% actually over year. And then Calgary, a solid 18% monthly increase. And this surge isn't random. There's 3 factors at play here. First is that more homes are being completed than ever. Over 210,000 units in the past year. And as you can see in this next graph, construction still remains at an all-time high. The second thing is that the rental market is softening, pushing more investors to sell their properties. And then third is the mortgage renewals are hitting hard. And it's clear that some owners would rather just sell than take the higher payments. And the bottom line, well, if you're a buyer, you've got more choices than you had in recent years. And if you're a seller, pricing competitively is now more important than ever. But like I mentioned in the beginning of this video, I'll break it all down for you at the end once we've gone over all this important data. Now, this is the fun part where we look at exactly what is happening in all of these major cities. So if you live in Toronto, sales jumped 10% in January, but overall, they're still 8% lower than last year. The bigger story is that inventory is way up. We're talking 70% higher than last year. Buyers now have way more options and sellers are feeling the pressure. Now, the official house price index says that prices were flat, but here's something a little sneaky that's been going on. December's HPI was quietly revised lower, as we can see in this first graph here, where December was at 1,094,000, but now it's posted at 1,089,700. So in reality, prices might be slipping more than they appear. And then what's even more crazy is that 331 homes in Toronto were listed under power of sale last month. Then you compare that to just 143 in 2024 and only 1 in 2020. That's a massive increase in distressed sales, and it could put even more downward pressure on prices. Over in Vancouver, sales dipped 3.5% in January, but new listings exploded. Inventory is now at its highest level since almost a decade. And the result? Prices are trending down. One thing to watch, construction is slowing down, especially for single-family homes. We're now seeing the lowest number of single-family units under construction since 2009. Fast forward a couple years, and this could lead to a new supply crunch. Then when we see this graph here for building permits that are happening in British Columbia as a whole, it's been trending downwards for quite some time. Though this shouldn't raise alarms in my opinion, because it's simply just due to the fact that less and less people are able to afford single-family homes, so the market doesn't build or need as many. Now for my friends in Calgary and Edmonton, you are both going in different directions. In Calgary, new listings shot up 35% year over year, pushing inventory to a 4-year high, which is actually making it a more balanced market. So that's great if you're buying, but sellers, you'll need to be realistic with pricing. Meanwhile, in Edmonton, the market is on fire. Prices are up 12% year over year, compared to just 2.7% in Calgary. And with inventory still at record lows, as you can see in this graph when compared over the last decade, Edmonton remains a strong seller's market. We've covered a lot of information here, so just feel free to go back and just rewatch the parts that are applicable to you. But as promised, what does this all mean for you? And so homeowners, I'm gonna start with you first. If you are considering selling, it's important to assess current market conditions in your city. If you live in either Toronto or Vancouver, active inventories have increased significantly. Toronto is up 70% year over year, and Vancouver is at its highest inventory level since 2015. More listings mean more competition, which historically has led to longer sell times and price adjustments. You may need to adjust your expectations regarding time on market and pricing strategy. For those in Edmonton, inventory remains at decade lows and prices have increased by 12% year over year. With limited supply, you as a seller are facing favorable market conditions. And in Calgary, market conditions are more balanced, with inventory levels rising and the sales to new listing ratios declining below 60% for the first time since 2020. This suggests that while demand is still present, buyers just have more options, making competitive pricing an important factor for sellers. Another thing to keep in mind is that you should also factor in upcoming mortgage renewals. With the large volume of renewals expected in 2025 and 26, more properties could enter the market, increasing competition. Now, if you're a buyer, these are going to be my recommendations based on what we're seeing out there. More inventory means more choices, which is what is happening in Toronto and Vancouver currently. They have both seen double-digit percentage increases in new listings, providing you with a larger selection of homes that are on the market. And historically speaking, increased supply usually means reduced bidding competition and just create more negotiating power for you as a buyer. And if you're looking in Edmonton, it remains competitive. With inventory at record lows and double-digit price growth, if you're a buyer in Edmonton, you're going to be facing more competitive environment compared to other cities. And those searching in Calgary, it's becoming more balanced. With new listings up 35% year over year and just active inventory climbing, you as a buyer in Calgary are going to have more options compared to previous years. Then I'd also like to draw your attention just to the interest rates, which in my opinion is a key factor to keep an eye on. The Bank of Canada is projected to continue to cut rates. And what does that mean exactly to you as a buyer? Well, lower rates improve affordability, but they also may increase demand, which in turn could impact price trends in the coming months. But one thing that we know is true is that the real estate market is always changing, and understanding the data is key to making informed decisions. If you found this update helpful, just make sure to hit the like button and subscribe so you just don't miss the next report that I come out with. If you want to see how this all compares to last month's report that I came out with, where I break down the key trends that are still shaping the market today, I'm going to link that video right here. And while you watch that, I'm going to go fly some drones.